We are in what they call the summer doldrums, but there is never a dull moment in Bitcoin. Since April, gold and Bitcoin ETFs bled out $12 billion. And over that same time window, semiconductor ETFs took in $20 billion.
You see semiconductors just ripping faces off. Bitcoin is at a 50% discount. What I do know is that one trade is extremely overextended.
People literally thought Bitcoin was going to die in 2015. AI wave that is sucking in a ton of capital, magnitude of capital that is quite impressive and something that I haven't seen in my lifetime.
Bitcoin is the only absolutely scarce monetary asset.
This really does seem as if it's for all the marbles in many ways. We are in what they call the summer doldrums, but there is never a dull moment in Bitcoin. Joe, you've been putting out a lot of great content, and one tidbit that I picked up on was this stat. Since April, gold and Bitcoin ETFs bled out $12 billion. And over that same time window, semiconductor ETFs took in $20 billion. Does this mean that the bottom is in? Has the rotation completed? Has enough juice been squeezed out of Bitcoin and been taken into the AI trade for us to go higher from here?
It's a really good question. It actually seems like we're at something of a tipping point. SpaceX obviously crashed massively yesterday. You had IBM, which is not necessarily as AI related, crash massively today for different reasons. Disappointing earnings report. This is one chart that really struck me, and like the Bitcoiners have partly, and I've myself included, we've sort of been like semi-coping with like, one of the reasons Bitcoin is underperforming is because of the massive AI capital drain. But like just intuitively, it makes sense, right? You've got these massive IPOs. Everybody wants to be allocated pre-IPO and they want to get allocated to the chip names. And so obviously it's going to take a lot of risk capital out of the super boring thing that's already down a little bit. But this sort of shows the picture plain as day. Now, of course, the scales are different for one, and for two, this isn't a direct inflow out of one and outflow into the other. But what it does do is sort of illustrate that at the exact same moment that all this capital has been flowing out of Bitcoin ETFs, and it sort of held up Bitcoin and gold ETFs, and it sort of held up until around May. And then the outflows really started accelerating. At the exact same time that's been happening, you just see semiconductors just ripping faces off, right? To the tune of almost 2x sensitivity here. You see, $12 billion in outflows, $20 billion in inflows, right? So it's massive. This is combining gold and Bitcoin too. So the outflows have been huge. I don't know if the rotation is nearing the I know for a fact that it's nearing the tipping point. Oh, I just say I know for a fact. I don't know anything for a fact. But what I do know is that one trade is extremely overextended. That's not to say there isn't value in these equities. I think there's tremendous value in being allocated to semiconductors, to memory stocks, to other AI names, et cetera, in the long run. But that's not to say we can't get a pullback in the near term, particularly at a moment where we're remaining risk on. Bitcoin is at a 50% discount, right? At some stage, in my mind, you see a rotation out of one and back into the other. And I think it lines up with Q4 when the 4-year cycle is slated to tip, but we'll see.
Yeah, that dreaded Q4 date. And the reason it's dreaded is because it lines up so perfectly with the 4-year cycles of the past. Marty, give us some perspective. You've been in Bitcoin over a decade now. How does this compare to 2018 and the one that we know well, 2022?
2018 and 2022, I think comparatively, they were better bear markets from a sentiment perspective. This bear market is more akin to the 2015 bear market in my mind, where the desperation was, and the frustration was very high in 2015. People literally thought Bitcoin was going to die in 2015. I don't think anybody's saying that this time around, but I do think the frustration levels are more comparable with 2015 compared to 2018 and 2022. I think 2022 people in 2018 to an extent, 2018 you had like the ICO blow up, and if you were paying attention, and the animal spirits of the fall and winter of 2017 were really focused on inflating the ICO bubbles. And if you understood them from first principles, you knew it was all fake air and it was retail driven. And so when they blew up, it was expected. And in 2022, similarly with FTX and BlockFi and Celsius, like if you understood how those products work, more BlockFi and Celsius, if you understood how their lending products worked, you knew they were susceptible to blowups. And so it was like something BlockFi, Matt and I on rabbit hole recap we're calling out for I think over a year before it inevitably blew up. Similarly with Celsius, then FTX, it wasn't as obvious to people, but I didn't really think SBF was as impressive as people made him out to be. And so when those companies blew up and led to a bear market and the sort of the seeding of the tide of retail investors, it was expected. But I think 2015, it was really like a year and a half after the Mt. Gox blow up, and people were like, why isn't this thing doing anything? And then this time around, like what Joe just said with this rotation, I think this bear market is leading to a lot of frustration because there's not anything sort of internal in the industry that people can point to being like, this is why things are flowing out of the market. I think it's an external factor, which Joe just described, this AI wave that is sucking in a ton of capital, a magnitude of capital that is quite impressive and something that I haven't seen in my lifetime. And so that's how I would describe it. I think it's more akin to 2015, 2018, 2022 were sort of explainable, looking at the ICO bubble and the Bitcoin lending products and the way they were structured back then. It was obvious they were going to blow up. And so this time around, there's nothing really obvious that is sort of industry specific that people can point to. It's an external factor. And I think that is driving a lot of frustration.
Agreed. People thought that we were supposed to have a glorious end of 2025 into 2026. This, of course, is slotted to be the 4-year turn down here, but there really was no blow up to bring us into this situation. Joe, in one of your latest videos, you were saying that while one more leg down is a cursed term that people always say at the bottom, you do expect for there to be one more leg down, particularly in this Q4, right, in the fall. What could take us down?
For sure, yeah. So I could wind up having totally, a ton of egg on my face here and seem like a moron, which is why I try to hedge myself as best I can when I give these. When I try to be as much of a soothsayer as I can, right? Which nobody ever is accurately in Bitcoin. The reason I point to one more leg down is, and I don't have the chart up in front of me, but for those of you who aren't aware, right, the Bitcoin 4-year cycle, generally speaking, bear markets from a Bitcoin native perspective last anywhere from 10 to 16 months. I believe that's the range. So 10 to 16 months before we go from our cycle high all the way to where we wind up bottoming out for the cycle. That would put Bitcoin bottoming at the earliest in like early September, or at least beginning to move higher in September. And then at the latest next February. And so like finding a pretty decent middle ground, just pointing and saying that Bitcoin's going to bottom with exactly 1 year in, right around October, November. From a time perspective, it makes sense given what Bitcoin has done historically. However, from a macro perspective, particularly with the news today, which is kind of crazy. I was expecting price inflation to actually come in higher and higher over the next couple of prints. But it came in low. It came in at 3.5%, which is kind of wild. 0.7% decline month over month, the largest month over month decline since April of 2020. Kind of crazy. And I wasn't expecting that. I was expecting it to tick higher over the next at least 2 prints as the oil shock worked its way through the system. But I suppose it has the immediate oil price has much more of an impact on CPI than I was really discounting. So there you go. CPI fell massively, or didn't fall. Well, it fell. Disinflation, not deflation. Prices are still rising. They're just rising more slowly. As a result, rate hike odds have come in from about 2.5 to just 1 before the end of the year. And I think you get one more inflation print that sort of disinflated like this prior one, and rate hike odds go to 0. You don't see any rate hikes this year. That was the major macro headwind, right? Like obviously the war in Iran, not ideal. I don't really want to be over there, right? I don't think anybody else who voted for Trump really wants to be over there. It's not ideal. However, from a macro perspective, as far as markets are concerned, really the only thing that mattered was the oil price. And oil prices are down closer to pre-war levels. Sure, they've spiked up now closer to $80, I think, WTI crude futures today, something like that. But they're still right around where they were toward the start of the war. So as long as they stay here, like the macro backdrop will be fine. That the final major headwind that I was pointing to, sort of keeping Bitcoin down, may be totally abated. And so you might see a this might have already been the bottom. We may have already bottomed. I tend to not think so. These periods in Bitcoin bear markets, and I think Marty will agree, it's like you get just enough of a move out of it that people think it's over before you violently whip back.
Mhm.
It's only after people are sort of demoralized to the point where they're like, okay, like I don't, Bitcoin is probably going to spend a ton more time here, that we finally move higher. I don't think we've sort of reached like near peak demoralization yet. I think this is another relief rally. That remains to be seen. I could totally be proven wrong. The major macro headwind is out of the way. If Bitcoin manages to close above the, go all the way up into the low 70s and close above the 200-day moving average and hold there and keep moving higher, like that would probably indicate the bear market is over. But I don't think so. I'll believe it when I see it.
Yeah, I think you nailed it right there. The main story of this year has been the Strait of Hormuz, right? But magically, the oil price has not agreed with it, right? People are calling for $150, $200 a barrel of oil, but magically, we've been able to keep it under 100 for months. Marty, you've been covering this story closely. What do you think is going on over there? Because it does seem as if hostilities have just lit up once again.
Yeah, I think I'm not going to pretend to be a geopolitical expert, but I think Anash Al-Haji, who's a great oil and gas expert with particular expertise in the Middle East, I think he said pretty consistently over the last few months, like the incentive to get a deal done doesn't make sense for either side. Like Trump can use it as this sort of this card that he has that he can play. He can, there's ceasefires on, ceasefires off, and keep markets on their toes. And then the IRGC, I think they want to project strength. And I think they are, despite the fact that their infrastructure has been sort of decimated to a certain extent. I think being able to show sort of leverage in the Strait of Hormuz and be a force that can really perturb the flow of oil shows that they have some strength. And so I think they like exerting that strength and disrupting things there. But I think if you look at the outcome for the United States, it's actually been good. I think it's been good for our LNG industry. It's been good for our oil and gas industry more broadly. We've done a lot of trade deals with counterparts that has shifted the leverage of oil and gas markets from a geopolitical macroeconomic perspective towards our direction. And so I think this could go along for a while. I don't think it's going to get escalated to a full-fledged like ground war, but I do think it's just this chess piece that both Iran and US like to have in play. And I think it will be in, but like to Joe's point, if you look at WTI, I pulled up the charts at $78.40 right now. I think markets are snuffing that out and saying they're just using this as some sort of headline driver that they can pull out of their back pocket and shift headlines one way or another on a whim. And again, it's not ideal, but it's just what we're dealing with right now.
Well, I agree. I don't think they can escalate at least until after midterms, but they will be playing these cards back and forth over and over again, it seems. Joe, have you been surprised at how they've been able to play the markets like a fiddle? How the Trump administration has been able to keep a cap on oil and make everything hunky-dory despite this great disruption?
It's pretty impressive. I think I heavily underestimated the amount of production increases that the other countries in OPEC could do to offset the gains to WTI. But it only makes sense, right? Like that is all these countries are, to be frank, for the most part, like Iraq, Kuwait, Saudi Arabia. Like the only reason these countries have vast stores of wealth, and obviously all of the other African countries as well, and even countries in South America, like generally speaking, the only reason these countries have any wealth at all and they're relevant to the geopolitical stage is because of their vast oil shares. And so or their oil stores. And so if oil becomes prohibitively expensive, can't really export as much of it. It hurts your country. And so what do? You ramp up production. It's like, this is sort of one of the reasons in a funny way, like this actually comes back to the value prop of Bitcoin, because Bitcoin does not have a demand response function, right, to price. And so what do I mean by that? Or a supply response function to price. So what do I mean by that? Well, when Bitcoin's price went all the way up to 126, miners couldn't go and say, hey guys, like Bitcoin's super valuable right now. Let's double the block reward. Let's triple. Let's bring the block reward back to the block subsidy back to 50 BTC, right? Let's do that. They couldn't coalesce and do that. And so that's sort of why Bitcoin is so valuable. It's the first major asset in world history to do that, right? It grows more valuable. You cannot create more of it, right? It's the only, I like to joke, Bitcoin is the only absolutely scarce monetary asset. But there are two absolutely scarce assets that you can't get more of if you want more of it, if it grows more valuable. And the only other one is time, right? So in a way, like when we're talking about storing wealth, Bitcoin performs that function better than anything. But regardless, right, to the point of oil, I just really discounted the amount of increased production that these OPEC nations could do. But when you realize that's kind of the reason they are relevant, then it makes a whole lot more sense.
Indeed. This story is far from over, and we are going to see someone needs to win this. I think that this conflict is too important for it to be this murky. They say they won, we say we won, and then we can just leave it as it is. This really does seem as if it's for all the marbles in many ways. If the U.S. can control the North and South America in terms of having all the political actors on our side, the resources on our side, as well as the Middle East in terms of oil, then we can really go to our rivals in terms of China and Russia and say, hey, we've got the energy and the world economies for much of this planet on our side. What are you going to do? In terms of, I know you're not a geopolitical maestro here, Marty, but I know you keep your finger on the pulse. How do you see this playing out in terms of the Monroe Doctrine, North and South America, energy, and the conflict with China?
Yeah, I mean, that's why I think the Iran situation is perplexing at first, but considering what I said earlier, like it does seem like the leverage in oil and gas markets has shifted our way. We've sort of turned the other Gulf states against Iran and more into our arms. And then on top of that, we've got flows coming from the U.S. to new trade counterparts. So like that leverage has shifted more to the Western Hemisphere. And I am a big fan of the national security strategy that was laid forth last year, and I think it does set us up well to compete with China, but I also think it sets China up well to just manage their part of the world. Like that, the strategy that was laid out in the national security document last year was basically like, hey, we've been extending ourselves across the world and meddling in foreign affairs that probably don't make sense for us and aren't in the best interest of American citizens. At the end of the day, we want to shift focus back to the Western Hemisphere, create trading partnerships with our neighbors to the south in Latin America, which is very resource rich, which there's a ton of emerging market potential in terms of the economies of Latin America, where they are and where they could be if we have solid sort of bilateral trade and investment in those areas. And I think a strong Western Hemisphere where we're really focused on what we're doing domestically within our borders and with our neighbors from a trade perspective, like it just makes sense to me. There's no reason to go out and try to extend the empire in across the Atlantic and in the Pacific. I think focusing on our backyard makes the most sense, and I think peace through trade is the best route. And if we decide that we don't want to be as dependent on China as a trading partner, because we think they've become too much of a they have too much of a strong grasp on our supply chains, and we want to reindustrialize domestically and then help build up the industrial capacity of our neighbors and the ability of our neighbors to sort of mine their resources and trade that way. Like it makes sense. And I think it's actually a path towards a more peaceful world where if you're able to concede to China, like, hey, if you want to basically do what you're doing within your borders and have trade partnerships with your neighbors, go for it. We're going to do the same over here. And that doesn't preclude that there won't be opportunities for us to trade together. But I think becoming less dependent on China's manufacturing engine and diversifying supply chains more towards our neck of the woods on the planet Earth makes a lot of sense.
Wait, you're telling me I can win free Bitcoin every day just by dropping a chip? Check out Sats Drop from Rhino. You get 3 free drops every day with chances to win up to 10,000 sats instantly. And if a super drop activates, we're talking bonus drops, multipliers, and jackpots of up to 100,000 sats redeemed right in your Rhino wallet. Sign up for free now and start stacking sats.